All right, so we're working on a couple things just to update us into real time. FOMC, I've been saying this unless you're under a rock, they meet today and tomorrow. 1 o'clock Central, they're going to put their decision on interest rates out. And then press conference, which is going to be important because it was July 31st, Powell gives at 1:30 Central. So the two times you got to be privy to, and that is 1 Central and 2 Central. Now, I'm sorry, 1 and 1:30 Central. Now, this Fed tool that you guys all should have up on a tab and refresh it now and again is out of the CME. And look at it now. We looked at it this morning with 61%, 39%. It's now 58.41. 58% and declining says there'll be a quarter point cut tomorrow. Again, this is September 18th meeting. Look at the tab up here. This is the cut a quarter camp. This is the do nothing camp. Leave it at 2 quarter. 41% and climbing. This was at zero. This wasn't even on the radar a week and a half ago. There was a 5% chance they do 50 basis points. That's obviously went way away. Only a 60%, let's round it, 60-40. 60-40, and the do nothing camp are gaining ground every hour. This is a Fed Fund Futures, and it's a tool on the CME. If you guys want the link, well, I'll just send it to everyone right now that are live. If you're not watching this live, you got to go to the CME Group Fed Fund Futures link and click on it. Something you should have open and bookmarked because Fed policy obviously rules and is a big driver the last, like, I don't know, 2019 years. Or whenever they, when did they create the central bank? During the Depression, 1920s, I think. So central banks are important globally, and I think that most people aren't aware as much as they should be. And that's not what this session is going to be about. It's just obviously to give you guys a sense of the outlier. I think there'll be some good price action because it's 60-40. I think the details in the statement are going to be important. It'll swing us around. I want you guys to watch the bonds, whether it's the 30-year bond market against the ES, if you're going to trade the ES, and most of us do, for these markets to move in the same direction after the 1 o'clock central statement. Same direction when it's central bank driven. All right. Another market to make it practical is the 6E. The 6E is the euro versus the dollar. It's pretty simple, right? And so if the dollar goes down significantly after 1 o'clock, the euro, the 6E would have went up. All right. So the 6E, if it goes straight up, that means the dollar went straight down. What does that mean? That's dovish initially. It's dovish. Dovish should mean strength in stocks, strength in bonds. Knee jerk. Dovish means a lower interest rate environment in the words of the Fed or in the action of the Fed. Lower interest rates. Lower interest rates, the native currency, in this case the US dollar, moves in the direction of interest rates down. The reason why I said the 6E is because most people might not have the dollar data out of ICE. So most people have CME data. So look at the 6E. It's just the exact mirror or opposite. If the 6E goes up, stocks, bonds, all should move the same way directionally because the 6E is opposite our dollar. And the dollar is in the same direction of interest rates. Interest rates down, the native currency of that central bank, which is at the dollar, would also go down. All right, that makes sense. So there's two products to watch: the 6E, 30-year bond, right, for direction at 1 o'clock, and then again at 1:30. But you have to have a sense of what Powell could say in his press conference to make us dovish, hawkish, bullish, bearish. July 31st, he said mid-cycle, which investors took as one and done, and the market got pummeled. Here's a look at a chart that I didn't want to show you. Well, actually, we could, yeah, of course not. This ain't the one I want to show you. Where the heck is it now? Oh, this should work. And we'll put this on a daily. Clear the drawings. Is this the SEP decent? I mean, yeah. All right. So here's the big sell-off. Forget about how it's spotty over here. It's the D's contract. Here's the big sell-off right here from July 31st when he said mid-cycle. In the next several days, they just stepped all over it. Now, they couldn't make lower lows as it would appear. We chopped in all of August. You guys remember that. And then we finally started to rally. I think we could look at this on a 60-minute. Forget about all these lines. I was working on certain things. But right now, these are hourly bars. And if we tighten it up back to July 31st, of course, it doesn't go back that far in this chart. It doesn't cooperate. But we went down. We created this box. And now we walked up. Now, what's important to note is that this market is expecting not 100% chance of a quarter cut, 60%. It might be 50-50 by the time we get to tomorrow. The reason why is because the stock market's been so strong over the last few weeks. The U.S.-China trade deal seems to be in a better direction. There seems to be more good faith by both sides. They have an early October meeting. All these things that have loosened up, even oil facility attack over the weekend, potentially by Iran, creates another driver, and I think it's important to keep an eye on that. And yet, we're still not down that much. On Friday, I think we closed in the S&Ps at like 30.08 on Friday. We're only 7 points below that, even though there might be war with Iran, even if it's not us, if it's, just Middle East worries. So crude oil jumped, I think, around 12% yesterday. 12% rally because of supply concerns with this attack on the Saudi oil facility, which was a major output supplier of crude oil. Then this morning, if you're in the trading room, you know that there was a report that they'll be online sooner than anticipated. So oil went down. And I talked about in these moments when oil is moving around on fear or lack thereof, stocks will move opposite. So stocks caught a bid when oil went down. Because in the macro scheme, we don't want oil to go up and stay up because of supply concerns, because of hurricanes, like Hurricane Katrina in 2005. Put oil on the map for me. I started watching it ever since August. I think August 05 is when Hurricane Katrina hit Louisiana and New Orleans. And oil, because of all those Gulf platforms, the supply, the uncertainty is the problem. It's not the end result. It's the uncertainty how bad it could be. And markets always assume the worst. So oil went up and stocks went down because at some point, high oil, high gas makes it too expensive to expand and grow. Too expensive for people to drive, too expensive for people to build and all that other stuff. So you don't want to see long-term uncertainty. Anyways, this opposite correlation existed on that move this morning. Hopefully everybody understood that, whether you caught it or not. Now I put physiological nugget, and that's the correct spelling for that word, I think. But that's not what we want to talk about. Psychological nugget is where I'm at. But we're going to leave this up so you guys could remember this a little bit better. Oftentimes, when what's important about being around group, community, and people who are passionate about this business and know a little bit about what they're talking about is they share experiences with them. And so, or thoughts with them. So I'm constantly thinking about the market. I'm constantly trying to have people help me help them. And I share those experiences back with them. So what's important with this nugget that I was telling someone yesterday, thought about it the last few weeks to help explain a little bit better how to make you better, how to make yourself better, how to make you better if you're helping yourself, someone else better if you're helping them. And that is to put yourself in a position to trade yourself as much as you trade the price, the market. To trade yourself. One of the interesting things by the psychologist that was hired, and we were able to see them for free. Well, not for free because we paid a percentage of our profits, but it was kind of for free. And we had once a week visits one-on-one with this guy. He wasn't a Brett Steenbarger. He didn't trade, but he did know a little bit about obviously he was a psychiatrist. So he was, the one thing I learned from him is, hey, he was more fascinated about what we did than vice versa. But he said, what's fascinating about you guys is that you guys trade directly for a living, even though all people are trading thoughts, emotions, ideas, laughter, anger. And this was even before social media took off. And think about all the ideas, opinions, and nonsense traded, good stuff, bad stuff, on social media. So everybody's trading. We just happen to be trading price. We think it's going up, we get long. We think it's going down, we get short. We're wrong and we don't get out. You think about that. We're wrong and we don't get out. Our tendency is to hold on to losers. Our tendency is to get anxious to get into a trade. And so as you're trading the price, we have charts, we have sound effects, we have me talking in a room, we have a team room of guys talking to each other. You guys have different variations of delta, being able to read all kinds of stuff, whether it's delta, tools that you like, order flow you read, domes you have set up. Everyone has 5 screens, 4 screens, 1 screen, whatever. We got all this data we come in. And I'm not saying that none of it's important. All of it's important. But we fail to go in between the ears. I'll draw a couple ears on this guy. Looks like a monkey, but we fail to go in between the ears and what's inside our head, because we don't want to go there. It's complex. We don't want to understand it. But how can we be consistent? And this is just a practical nugget or idea. But you got to pay attention to yourself. If you don't pay attention to yourself, then this isn't going to help you. Everybody gets anxious when we trade, when we drive, when we're in an argument, when we're in anything. There's times where we get anxious, okay? Generally, we're anxious in trading for one reason. One reason. Because we're afraid to what? To miss. When you're afraid to miss something, you get anxious. You'll jump on that house because you're afraid to miss this great kitchen that it has. And your wife tells you there's no kitchen we'll ever get. We got to get this house. You're afraid to miss it. You get anxious. You jump. Now, it could be the right decision. But when you get anxious, you're going to act. You're probably going to act pretty quick. Marketers do a great job getting potential consumers what? Anxious. How do they get you anxious? How do they get me anxious? What's a great way to get someone anxious? Promotion. That's time sensitive. You have a time sensitive promotion, it gets people worried about missing that price, so they get anxious, they execute. So in trading, we're worried about missing a big move, so we get anxious and then we execute. How many times do you that resonates with you? If now, when you think back, how often you feel anxious at times because of one reason of worrying about missing? Put a yes. Put a no if you disagree. I don't care. But anxiety creates haste. And haste is generally no good when making important decisions, because as soon as you're anxious, and follow me on this one, as soon as you're anxious, you're now on this emotional timeline away from objectivity. So if objectivity is this center line, and if you're going too far this way, you are like a rock. You're so objective, you might as well not even be human. But if you're too far this way, you're so emotional, you've lost sight of what's in front of you and what's real. And I think anxiety is one hash mark and starts to walk you away from objectivity. Objectivity is seeing what's there, right? Analyzing it without bias. That's the problem with a lot of people's political preference and religious preference, is that it's hard to be objective when it's so emotionally driven. So you can't really get to you can't really get any baseline. But there is objectivity, and you get further away from it once you start getting anxious, generally speaking. Expand on that, Bob. Is my sound got a little way? I was pulling the mic away. How about now? Does it sound pretty consistent now? No, someone else is saying it. My speech has slowed. Maybe I'm getting anxious. Hold on. How about now? Sound better? No, sorry. Check. Check. How about now? Is that better? Good? We good? All right. We're good. Are we still recording? All right. Much better. Back to normal. Great update by Zoom. Good job, boys. I didn't see any problems before this update. I just want to make sure we're still recording. This is the thing. I don't even know where the my toolbar is again. Oh, here it is. All right, we're recording. Still recording. Sounds better. So let me go back to maybe what we missed in the sound drowned out. Objectivity, you move further away from it when you're anxious. And there's other kind of milestones. And the further away you get from being objective, the more bad decisions you're going to make, no matter what type of decision it is and what it's for, trading or otherwise. So you have to balance, and I'll read that in a second, Bob, because I think it's good. But you have to balance. You have to trade yourself. You have to be cognizant. Are you bullish because you're anxious and maybe early? Hey, it's okay to be bullish, but you're anxious. Be patient. Let the other guys get anxious. When you're in a zone in trading or making just good decisions, right? I know that if I'm in a zone with my wife, it's generally because I'm making good decisions. I'm not saying stupid stuff, and we're clicking. We're clicking. And I'm in a zone trading, it's because I'm in touch with how I'm feeling and knowing that I'm anxious here. That's why I want to buy it here. Let all the other people who are anxious. If it's obviously an anxious moment and there's a big bucket that is collected a lot of people who are anxious and they all buy it, that's where a shakeout is due to go down before then you go up. And now this becomes the moment to buy it. And if you had done it there and you felt anxious and you did it anyways, you became part of this painful move lower, maybe got stopped out, and then it went right where you thought. Too many people were bullish because too many people were anxious. Therefore, too many people with haste got long. Right direction, bad timing. Anxiety. And I'm always working on better ways to look at the same thing. And I'm going to show these dials in a second, but I'm always looking at better ways to see the same thing, feel the same thing, get in touch with yourself, because it's that anxiety that makes you patient. I'm bullish because of a good reason, but am I willing to trade because in my location is because of anxiety? Because being bullish, while it's important, location is more important. So if you let anxiety to dictate your location and pull the trigger, your locations probably stink and you're with the crowd. And that's what's important when you're trying to trade, is to think about how you're thinking. Not many people make better decisions when they're all pissed off, anxious, and worried. That's what car dealerships focus on. People are all educated, right? They're all educated nowadays of what the price of the car should be, all the negotiating tips that they have. There's one thing that they don't cover: emotion. The car dealerships, the car salesmen do this for a living. You're not buying a car for a living. You get emotional. There's always something that screws you up. There's always that curveball. And now you're going to have to handle that curveball, see that curveball, hit that curveball with a heavy dose of emotion. And the heavy dose of emotion in trading is money, your own money. Curveball could be some event, some other market, some other thing that got you to think, you're going to miss it, buy it. When I trade like SHIT, I'm always long the top of the breakout, short the bottom of the breakout in that particular moment. I got the direction and the feel right. I'm just early. It's going to break out, but it's not, it's slow. Therefore, you're too anxious. You feel anxious. I know I feel anxious. And when I do something about it, I become more patient and pick better location. My direction was great, but my anxiety gave me poor location. So work on following yourself. Trade yourself as much as you trade that chart, that dome, that price, that argument, that debate. Someone in the team room has just picked up that Saudi Arabia has pulled billions of cash from U.S. markets in the last 24 hours to support their own economy after these oil attacks. Add that to the Treasury funding payments that Tom talked about, and you could see how a squeeze developed. So Jim is updating us as to what's updated in the team room and what's updated on what Tom had talked about with that article. So hopefully you guys do something coming out of this to just maybe every time you feel anxious, just put some document it. You don't need anything to show you that you're anxious. Just document it. Do you feel anxious? And know that you're anxious because you're worried about missing something. That's generally why you're anxious. Now, let me read what Bob wrote. We are all anxious, he says, but if the boogeyman never appears, we hold unrealized anxiety, which becomes frustration. We worried for nothing and wasted time and energy that could, might, should have been a better trade. And therefore, we're worried about missing it. If I miss this trade, this is a great trade. You end up starting, here's what you end up doing when you're worried about missing this, a trade or anything. It could be a house, it could be whatever. If you are looking to be long from this X down here, okay, because you think it's going to this X up there, or you just think it's going up and you get really anxious, part of what you're believing is you're already visualizing the chart doing that. It hasn't done that yet, but you know it's going to do that. You get anxious and you buy it here. And if you're doing it because you're anxious and you feel anxious, generally other people are anxious with you. Too many longs, it has to go down before it goes up, and then it fills out that chart pattern. But you visualize all the stuff, and you're like, I don't want to miss that. I don't want to miss that. A trader, when I was looking to buy my first house, I had been trading for a couple years, and a trader colleague of mine said, it stuck with me to this day, trader colleague, he said, you got to be willing to walk away from a deal in order to get a good one. You got to be willing to walk away from a house if you want a good price in order to get it. If you're emotionally vested in it, well, that's fine. You're going to pay up. But think about that for trades. Now, houses are bigger decisions, right? And houses are more unique. Sometimes, you know, if you could afford it, buy a house that you like. Great. But with a trade, price is the analogy with houses, not the actual tangible end product of it. Trades are stupid, right? So when you make a trade, if you miss a trade, who cares? But in order to get a good location, which is a good price, okay, you have to be willing to miss a good trade in order to catch You have to be willing to miss trades in order to catch good ones. And if you don't want to miss, you'll be early a lot. You'll pick bad locations. You'll have to take a lot of this heat before you end up being proven correct. With all these stories we have coming at us, let me add, we've got the oil attacks in Saudi Arabia, maybe by Iran, and all the unrest that brings over the weekend. We got a now 60-40 chance of doing nothing instead of 100% to zero. We were going to do a quarter, no doubt. Now it's 60-40. We're going to do a quarter tomorrow. So to me, that's bearish for stocks. The Middle Eastern unrest, bearish for stocks. And yet we're not that bearish in stocks. So there could be downside, but I would imagine there needs to be another driver or something that comes out of this story. So a lot of uncertainty. Now let me bring these dials. I just want to keep people who aren't maybe in the room. These are not, I'm testing them, and I'll tell you how I test these. There's a lot of them up now, and it's not like you'd have all these up, but I'm just testing them. These are dials that, hold on, these are dials that just track uptick, downtick. Each dial is a different market. This middle row is 30 minutes or running 30 minutes of each of these markets. So it's almost like a 30-minute bar. So you're like, if this is the Russell, they're halfway in the last 30 minutes of their range. All right. These multiple needles here are kind of cool because each needle is a different equity market. The purple one is the NASDAQ. The orange one is the Dow. The blue one is the ES. The gray one's the Russell. So you could see an outlier. Maybe the NASDAQ's a little weaker. This top row is just 5 minutes. So the needles are going to move a little more, jerk around. But here, look at this. This is the one. We put a clock in here. I record these needles and go back. I'll watch them in real time, but then I'll also go back to see what I could have seen to help keep me less anxious and more objective. What am I waiting for? These, I think, are really good when you're already bullish and you're looking for that reason to buy it. Like right in here, this is the bonds. The bonds are on a 30-minute low or close to it. And so they're turning red. Could that be bullish for stocks? Yeah, if there's an opposite relationship. Take a look at this one. I got two needles he put up. The gray needles is the ES, and this blue needle is the ES rather, and this gray needle is the bonds. Bonds, ES. So they're opposite for now. But tomorrow, what's going to be interesting is they're going to move the same direction. And I'll record it and we'll take a look at it because of after the central bank, the FOMC and the Fed releases their statement, they'll for a time move together. And I think you'll see it pretty nice. But these are just to get an idea. Like if you look across here, these are all 30-minute equities, and this is oil. Okay. So all the 30-minute equities, the weakest one is the Dow and the NASDAQ, but not by much. They're at the 9 o'clock. You got the Russell's the strongest at 1 o'clock, and you got the ES over here. So these two are the weakest, but not by much. Russell's the strongest, and so on. So we had an oil 5-minute, and oil 30-minute. So it's an interesting way to look at the same thing of market correlations, but maybe more in an efficient way that we could catch it and absorb the data in more of an intuitive way. Because I think that we look at dials as drivers, circles, gauges, right? That way for a reason. We don't look at charts for our fuel or charts for our speedometer, do we? It's a dial. Turns to the right, you're going too fast, slow down. Unless you're nice to the cop, then he won't give you a ticket. But one of the things that work for when you get pulled over is admit what you did before he asks. Never ask what you did wrong. You know what you did wrong. Same with trading. And that's the reason I bring this up, not to get a laugh out of you guys, but you got to admit that you did something wrong. Give a chance to get out of it. Right? Got to admit that you did something wrong and that you might have sucked. So stay focused on yourself and try to document moments where you're anxious and see if you draw a chart on yourself and kind of go from there. Also, I'm doing another round. I might send an email, but I'm only doing 3 like I have these coaching sessions. Those that have done it, you guys that are thinking of doing it, ask people who have done it and see how well it's worked for them. I wouldn't continue to do it unless I got the feedback I got from people that love it. I enjoy doing it. I'm learning a lot about people, their weaknesses, their strengths, but they're getting a lot of help out of it. And I'm sure they'd all tell you that they like doing it. I'm doing another round. I'll send an email unless someone else does it because I got 2. There's 1 spot. I'd rather not send an email out because then I get questions I got to answer. Not that I don't mind answering questions, but if you're thinking about doing it, I think you're crazy not to do it. And it has nothing to do with selling this product. You guys are in this group, know me well enough not to do that. It has everything to do with how important it's been to do something like this for accountability. Big weakness, a big thing missing in this business. And I couldn't have said that as much 4 months ago after doing some of these than I do now. So if you want information about it, email me. If not, I'll send an email out giving you guys it. But I would think someone else fills this spot for this round. Reason why I don't do more is because I don't want to not like doing them. If I got to do them every day, people might think, oh, that's a lot of money. Listen, I don't want to not like doing something. Then I'm not going to do it as well. It's not fair to the person paying. It ain't fair to me. I only do a few, so I enjoy doing them. And it doesn't become a job. That's what's important. So if you're interested in these coaching sessions, let me know. If you got any questions about this, ask me in the room tomorrow. But I suggest people just chart themselves somehow, some way. You're anxious, put something, have a red marker and put a dot at the time you got anxious. Put on the trade, but if you're not anxious after you get into the trade, because we're all going to be anxious for it to go our way, and those are maybe some other emotions that are interfering. But if you're anxious, it's the emotion that makes you feel like I better do this or I'm going to miss it, right? And you get anxious. See if you're anxious or objective when you're ready to pull the trigger. Yes, it includes Doug the Verbal Journal if you do this coaching session. I give it to you and let you keep it because it's an integral part of doing these coaching sessions. I could listen to people's feelings and everything else. So it's worked out. Just Anthony at edgetrading.com. Email me there. Ron, is this even a word, though? Physiological? It is. I know that's the measurement and the chemistry of your body, right? I know that. I just didn't know if that spelling was right. It's supposed to be psychological nugget, but because it was spelled wrong, that was the only option that the spell check gave me. I went with it. All right. Good luck, guys. I'll probably jump in the team room tomorrow for the 1:00 FOMC meeting. And right now we've got the market waiting for the next direction, the next move.